if USDC goes public and they're not doing what they're saying they're doing, they're going to jail.
Billionaire businessman and investor Mark Cuban in his latest crypto interview warns investors that more pain may be coming for Bitcoin, Ethereum, crypto and stock markets as inflation and recession fears worsen. Let's dive into the interview.
I'm actually more positive on Bitcoin than probably most people. There's a lot of arguments to be made about how it's not, decentralized and this and that. But, I think it's a better store of value than gold. And when people just...
That's not saying much.
No, it's not. But at the same time, people have to put their money somewhere.
Sure.
And if you look across the spectrum of assets, and whether you have $100 to invest or $100 million to invest, when you look across the spectrum, it's difficult for people just to put their money in the bank. And there's risks other than treasuries, which are paying 2.9%, where you lock up your money for 10 years.
Right.
That's not really attractive either. So people are going to make choices of where to put their money. And the question becomes what and when. And right now, I don't think it's when, but I do think Bitcoin is usurping gold as a destination, as a store of value. Because gold, people talk about, well, there's no utility on Bitcoin. And, I can't argue a whole lot of that. There's a little bit of utility, not great. But if you look at gold, it's not like people need jewelry.
Right.
It's not like that's a need, right? That's just vanity. And so, they're equivalent in my mind. So I think Bitcoin, from a pricing perspective, I think will hold a lot better than people expect. Right. So when you look at Bitcoin, it's just the things I've said. It's a store of value. And I think it's better than gold because it's more transferable, easier. Because look, it's not like people actually hold bars of gold. Gold, the buying and selling of gold is all digital transactions. And so, it's all fractionalized and virtualized. So they're 6 of one, half dozen the other. And so I think there's always going to be a market for simple store of values other than cash, because people are willing to, other than your homes even, because people want to take on some risk to try to get some appreciation. Because that's the only way you're going to get wealthy. If you're just, if you're working every single day and trying to save money for retirement, it's hard at 2.9% for 10 years. First, if USDC is transparent like they say they are, now if there's fraud, like Terra, that was meant to blow up the day it started, right? I got, the only thing I'm mad about with Terra is that I didn't short it. I got the opportunity to invest in Anchor and I said no, because you can't keep on paying 20% with no source of income. But at the same time, if you think about it, think about what I just said about Ring and how people were investing hundreds of millions to do tens of millions in revenue. It's the exact same thing. Either you subsidize sales of a product, which we've seen with VCs in Silicon Valley time and time again, right? We're raising all this money, and we'll make it up in volume. That's just what's happened with crypto. People put up money and they subsidize it with rewards, and they're buying the rewards back from their customers, hoping they create enough transactions, right? And they make it up somewhere. Anchor wanted to do it through loans and they couldn't do it, right? So that was ripe for failure. USDC is not trying to do those things that I can see. I mean, are you guys seeing anything untoward about USDC? You'll get a multiple of whatever earnings you have based off the scale from the public market that you don't get from crypto. So that it's not just retail investors. There aren't enough retail investors who are buying to support the entire public market. There just aren't, right? And when they go away, markets decline. And you can see that reflected in Robinhood, right? Where you see the volume just dry up at Robinhood and the challenges that they've had. But at the same time, I don't necessarily think that's a reflection for USDC or any crypto company going public, because assuming the SEC can somewhat do their job, you've got to file all your reports and you've got to be, have some level of transparency, and you've got to be able to demonstrate that if USDC goes public and they're not doing what they're saying they're doing, they're going to jail, right? So USDC going public is a positive for the crypto industry, and I think it returns to their investors. You're right there, but it also allows them to earn a multiple of their earnings, which you can't do as a private company, and the liquidity that comes with that. So if they want to go out and buy Tether and then all of a sudden bring it in under their umbrella, where, that's another however much is left until there's $62 billion. And they want to say, okay, we're going to change it so, it's dollar for dollar in treasuries and USD, real US dollars. Okay, there's something to be said for that too. But yeah, I don't look at going public as being a problem or it's a reflection of the fact that they're dumping on individual investors, because they're just, companies have $1 trillion market caps now. There's just not enough buyers to retail buyers to support that. But let me just finish to answer your question. So when I look Bitcoin, I look as a store of value, and the maxis for the most part will just hold on because their cost, they probably already sold what they need to sell, and they don't want to pay taxes on anymore. And so, they're probably going to hold on, and the data from wallets supports that, right? The longer people hold, the longer they hold, right? They do hodl. And Ethereum, the concern there, and I own a lot of Ethereum, is more on the utility, right? So what drives me in and out, and I'm waiting more on the sidelines, I've sold a bunch of my Ethereum, fortunately, is looking to see the applications that drive transaction usage. Because it was DeFi and it was NFTs, and that was driving a ton of transactions. And now that DeFi is no longer being subsidized, you're seeing, 2%, 3%. And where you're seeing 10, 15, 20% or more APR, or yield rather, it's because somebody's subsidizing it in their coin, right? And they're doing it 2 orders down, where instead of just writing you a check or sending you money, they're just saying, okay, we're going to give you our token. We want you to hold it, and we'll create some inflation. And we're hoping that there's somebody there to buy it at some point in time. That's a recipe for failure. So when I see some of these chains that are just offering tokens, they better have raised a whole lot of money, otherwise they're going to fail. But on the flip side, you've got NFTs on Ethereum, and you've got other DeFi, and you've got other applications that are working that can generate transactions. So then it just becomes, what new applications will generate transactions? And that's what I look for. DeFi and NFTs are no longer enough for it to just say, okay, this makes it a no-brainer. We have to see the follow-on transactions. And that's why I've said we're in a lull period, just like we were on the internet, where after e-commerce and search engines and some basic stuff, it took some time and some technology advancements for the internet really to start getting some really advanced applications where people said, okay, I have to use it. And then mobile took it to a next level, et cetera, et cetera. And that's what we need in crypto. We need those applications.